In the last few days, the stock market has been down, and that's the perfect time to find new opportunities. Recently, I'm getting very interested in Booking Holdings. The behemoth of online travel has taken a serious hit lately. The stock is down and the market seems to be questioning its future. But is this a buying opportunity or a warning sign? Today we are diving deep into Booking Holdings to uncover if this travel giant is ready to soar again. Is it time to book your position in BKNG stock? Booking Holdings doesn't need presentations. They are probably the biggest online travel agency in the world. Even though they are a tech company, they are inside the consumer cyclical sector. Even though there are some cyclicality in their business, this is a very high quality company and a lot of good fundamentals in this company that we'll talk about in the next few minutes. But for now, the stock is down 9% today after reported the second quarter earnings, even though that was a bit and in my opinion a really good report. There are fears that their growth are not accelerating as expected, or some fears, or probably investors were expecting better from this company. But right now, year to date, the company is down 4%. Last 5 years up 80%. Their stock price is $3,300 US. This is a, of course, this company is, their price is really high, so they should be overpriced, but that's not probably the case, and you should say that. But Booking $115 billion market cap. They are trading at the PE around 25, but the forward PE of 16. Looking at the forward PE 16, it's not high. Right now the S&P 500 is trading at the forward PE above 20, and I do not believe Booking is all deserves a forward PE above the median of the S&P 500. So looking at the forward PE, this company looks pretty cheap, but having a low forward PE doesn't mean this company is undervalued. So fundamentals, they have been growing around 80% per year, gross margin of 96.9%. This is outrageous. I've never seen a company with gross margin so high, actually, which is really good. We really like to see companies with higher margins. Net margins around 22%, really good. Their balance sheet is pretty good, actually. Almost $16 billion in cash and short-term investments. Their long-term debt is around 13.4 billion, so they have net cash position of around $2.6 billion, which is pretty good. There are not many companies with a strong balance sheet as Booking. Their returns on equity, it's pretty high. I've never seen a return on equity so high, but that's because they don't own a lot of equity, I would say. So they don't have a lot of, or they have a lot of return, but they have their price to book should be, they don't talk about their price to book because they have so little equity that's for the market cap that they has. Their return on invested capital last year was 48%, but 5-year return on invested capital is around 18%. They have been going up, but this is a company that is paying a dividend of 1%, and year to date they are down 6%. But is this a buying opportunity after being down 10% in this latest earnings report? Let's look into the Mage Checklist and looking to fundamentals that are really important for us. Revenue growth is a check. They have been growing really fast. High gross margins and net margins. Net margin around 22%, but free cash flow margins above 30%, and free cash flow, it's what matters. So really great margins. That they have a pretty good balance sheet. Returns on equity and on invested capital, it's a big check, really high. They have a lot of competitive advantage. For me, they have a wide moat. When you talk about competition, in the US they have Expedia, some competition, but in a different way from Airbnb. Google could be a competition, but Booking is one of the biggest clients of Google, so Google doesn't want to compete because they don't want to ruin the business of Booking, since they have been earning a lot of money from advertising from Booking. So in Europe they have a monopoly. Everyone uses Booking on Europe. So they are basically a leader in this sector, and with this travel boom, Booking will be growing for the next few years, in my opinion. They've been free cash flow positive, and they've been returning capital to the shareholders. Looking at, they have one of the best fundamental scores on my watch list. 98 is very high. When you analyze their, for example, the revenue and then free cash flow, they have been steadily growing, free cash flow growing. This is really beautiful. Gross margins have been steady around 85%. Return on invested capital in 2020 they were down as their revenue and their profits because there was COVID and people were not traveling, so that was bad for Booking business. But right now they are recovering and they are pushing really high. Shares outstanding, they have been very aggressive in buying their shares, so this is something I really like. Basically in 2023 they bought back 8.8% of the company. Just this year, in 2 quarters, they already bought 4.1% of their shares outstanding. This is beautiful, I would say, and trading at a cheap valuation, or at least it seems like. We'll do our discounted cash flow to analyze that, but they've been buying back a lot of shares. That could be creating a lot of shareholder value, increase their earnings per share. So for that, if they are cheap, if they are undervaluing, they are doing a pretty good job buying back their shares. So let's do our discounted cash flow for a 10-year analysis. Since they are a United States company, I would say the risk is low, even though this is a cyclical company. I will use for my base case a discount rate of 11.5%. This already has some margin of safety, since the median return of the S&P 500 is around 9%, so we have some margin of safety. They are expecting to grow around 8%. I will expect them to grow around 8% for the next 5 years, and around 6% for the last five years of this 10-year analysis. For a PE, I think they deserve a premium. They don't deserve to trade at the median PE of 16 or 80. That is the mean of the S&P 500. I will assume a 21 PE. About margins, last year free cash flow margins were around 32%, so I will try to be conservative. I think they can have easily 32% free cash flow margins. Basically look at that gross margins of 90%. This is pretty high. So for my base case, I will use a discount rate of 11.5%, 21 P, and growing around 8 to 6%, 32% margins. And of course I will do my bull case and my bear case, and with these assumptions I came with a fair value of around $3,750, around that. Right now the stock is down 10%. It is trading around 3,300. This is some margin of safety of 10%. But bear in mind, my fair value already has some margin of safety because I'm using a discount rate of 11.5%. So this is the price I'm comfortable and that I want to buy this company. And right now it's trading at a discount, in my opinion. So Booking was a company I was not looking. It was not even in my watch list, but I found out recently, and I really like the fundamentals of this company, their market position, and I think this travel business are in a kind of boom. More people likes to travel, discover new places, spending money in new experience, and Booking is one of the companies that can take an advantage from that. So their business is really good. They have basically a lower stock-based compensation for a tech company, basically high margins, low risk. The only problem I can see in book, it's a cyclical company. If we have a recession, if consumer is having some difficulties, this business will suffer. They will be down. But for right now, it is a wonderful company, a really great business model that is trading at the fair value, a little undervalued actually, in my opinion. So, but if next year or in one of the next year if there is a recession, this company will suffer, and you might have a really great opportunity to buy it at a bigger discount. But right now, the the company, the stock is booming. It looks like a really great opportunity. And full disclosure, I started a position today, and it is a company that I'm interested in increase my position. So I really like this booking holding stock, BKNG. I think it's a great company, one of the best fundamental scores in my watch list, and it is a company I'm expecting the stock to go down even further, so I can have a better entry point. So this is a great company. I really love this company. Really great fundamentals. But is this a wonderful company at a fair price? I think so. So I hope you like this video, guys, and if you like, please like and subscribe. See you next time.